Welcome back to the channel. I trust that you're doing well. Bitcoin sure is breaking out to a new all-time high. Congratulations, everyone. While that's going on, Bitcoin continues to make history, which we'll be looking at in this video, and we're seeing a sudden major demand for Bitcoin. And if you've been following any of my past videos, we've been looking at the supply crunch, where we've been watching Bitcoin's supply dry up on exchanges and even drying up on over-the-counter desks. And now we're beginning to see a little bit of that supply shock take shape, among other factors that are driving Bitcoin's price to the upside. So stick around and let's get into the video. And the demand for Bitcoin is suddenly starting to skyrocket. We have a post here from Bitcoin News. Bitcoin accumulation addresses hit a new all-time high of 248,000 BTC. This chart right here, we are looking at the demand from accumulator addresses. In solid purple, we can see the accumulator address demand. And as you can see over here on the right-hand side, it is absolutely skyrocketing right now. We also see the accumulator address demand SMA 30 period, which is this dotted line on the chart. And SMA stands for simple moving average. And as you can see, the accumulator address demand is skyrocketing also above the 30 period right now. So with the supply drying up, we've been covering that in past videos, OTC desks are running out of Bitcoin supply, and even exchanges are running out of Bitcoin supply. And suddenly we see this sharp demand for Bitcoin, and what happens? We get that supply and demand imbalance, and of course, it's one of the pieces of the puzzle that is sending Bitcoin to all-time highs today. And of course, we're seeing Bitcoin rise through the ranks, becoming one of the most valuable assets in the world. This post here from Bitcoin Magazine, just in, Bitcoin surpassed Amazon once again to become the 5th largest asset in the world. If we look at this chart over here, we see Bitcoin taking out Amazon and just behind Apple there. And from what I understand, only about 5% of the world, maybe less, is involved with Bitcoin. So just imagine where this goes as more and more adoption increases. And alongside that, we've got Bitcoin making history yet again. We can see here that just in, BlackRock's Bitcoin ETF surpasses 80 billion in assets, becoming the fastest ETF to get there. If we look at this chart over here in yellow, we can see IBIT, which is BlackRock's Bitcoin ETF, reaching an 80 read in just 374 days. All these other ETFs over here, in some cases, took as long as 2,089 days to reach the same level that Bitcoin did in just 374 days. Amazing. Moving on to the Bitcoin ETF tracker, we are seeing some large accumulations begin to take place as well. So we can see back here on July 7th, there was a small accumulation day there of 80 million. Small, still quite a bit. We can see on July 8th, 228 million of net inflows, but here on July 9th, we can see almost 1.25 billion of net inflows into the Bitcoin ETF. So accumulation is beginning to accelerate. And how many of you remember what the German government did not too long ago? This post in from Watcher Guru, just in, German government's decision to sell 50,000 Bitcoin at 54,000 cost them 3.1 billion in missed profits. Pour one out for the German government. They left a lot of money on the table. And jumping into the price action of Bitcoin on a daily time frame, and we are seeing that beautiful breakout to a new all-time high. Congratulations, everyone. Bitcoin is currently trading at 117,523 at the time of making this video. In my last several Bitcoin analysis videos, it was just kind of drifting sideways in this area right here. And I was saying, hey, look, Bitcoin's in the waiting room. Likely a big move coming. If it's going to be a bearish move where we see Bitcoin sell off, the bears would need to step in sooner than later and roll price action over. The reason why is because ever since Bitcoin put in its previous all-time high in May, it's been in this short-term downtrend where we see lower lows and lower highs along the way. So had bears been able to take over and roll price action over in this area here, it would have been another lower high as opposed to back here and as opposed to the all-time high, meaning that this short-term downtrend structure would have still been intact and the bears would have still been in control. For a bullish bias, I was saying be on the lookout for at least a daily candle body closure above this pivot right here. If the bulls manage to close a daily above that pivot around that $110,000 mark, then technically speaking, it would be breaking the structure of this midterm downtrend and probability would begin to favor the bulls. If we grab a horizontal here and we mark this pivot out right here like so, we can see, oh, we got this extra one here, that one can go. We can see that we got this beautiful daily candle body closure right here. The very next day, we see a back test of that area. So we got the SR flip, former resistance becoming future support, and then Jack and the Beanstalk shows up and prints this giant celery stick to the upside. So beautiful bullish follow through there. So the condition got met for the bulls right here, back test of that area, and then nice beautiful follow through to the upside. So basically when we got this condition met where the daily candle body took out this area here, it broke that structure. And that's signaling at that point that, hey, the bears are out of ammo. They were unable to keep the structure of the downtrend intact, and that probability would begin to favor the bulls. Now, obviously, technical analysis is not a crystal ball, and I do not use it as such. There's plenty of other good stuff going on for Bitcoin right now that's far more important. I use technical analysis for a few reasons. One, to keep my thumb on the pulse of what's going on from a price action perspective. Sometimes it's nice to cut out some of the noise and just look at the data. What are the buyers and sellers doing with their wallet? But we've been looking at lots of other things on the channel, like the supply crunch for Bitcoin. I've showed plenty of charts where the Bitcoin supply has been drying up on over-the-counter desks, and also the supply has been drying up on exchanges as well. With that being said, we also have the big beautiful bill that just got passed, which is going to be an inflationary bill. And as more money enters the system, well, assets like Bitcoin benefit from that because it has a fixed supply. The Fed fund policy too is very important. Like, are we in a QT cycle, which hopefully we're coming to the end of that soon. But when does the Fed pivot into QE? When do the interest rates come down? These are the things that are going to benefit assets like Bitcoin the most. But if you're using that as your North Star and you use some TA along the way to identify areas of value where you might want to be a buyer, or to be able to set conditions for bias busters to, maybe go, hey, where am I wrong about my idea, or where am I might be right about the idea, then TA is a very helpful tool that balances out a well-rounded trading strategy as well as an investment strategy, but certainly not a crystal ball. So, when we knew all those things, like the supply drying up and where we're at in the macro things, when we got that candle body closure up above there, basically we were seeing confirmations from a price action perspective, and it was it was easy to identify that probability would favor the next big move to the upside, and that's certainly what we got. So TA, not a crystal ball, but a very helpful tool, when you're using macroeconomic things as your North Star. But anyways, this is looking really good, you guys. If I go ahead and pull a Fibonacci from right here, let's go ahead and take it down to that wick. When it comes to fib extensions, I do like to use the wicks when it comes to crypto. And we can see that Bitcoin has already come up, taken out the 1.272. A little bit of a back test. The candle body didn't get down below that. And now we are stalling out a little bit at the 1.414. And I don't think this is over. We still got the 1.618 up here. Maybe we'll watch that level. That's coming in at about 120,700. And I'm not making any big calls about anything like that. It's just, let's watch that area. Let's go ahead and watch that 1.618. And if Bitcoin continues this beautiful momentum to the upside, let's see how it interacts with that level up there in approximately the mid $120,000 range. And I'll point out here on the CME chart that price action did gap up yesterday right here. Now, gap theory suggests that gaps fill over time. I mean, a lot of people were arguing about this gap right down here. Some were saying that's a gap, and others were saying it's not because these wicks are really close to each other. But if we go back in time, you can see that there are some obvious gaps. Like there was this obvious gap right here. Price action kept running up, but ultimately it did come down and it did fill that gap by hitting this price point right here. If you look left, you can see price action came down and filled that gap. So these gaps can certainly fill. If we look over here, we see a really obvious gap right here. Obviously, price action came up, filled that gap there. And we even see a bit of a gap right here where obviously price action came down and filled that gap as well. So a lot of the times these gaps will fill. So maybe in the coming days, perhaps we see Bitcoin quickly come down and fill this gap before continuing on. Who knows? Let's just take it level by level and we'll watch and see what happens. But just keep it on your radar that there is a gap here. And in order to fill this gap, we would need to see Bitcoin pull back to approximately 114,370, somewhere in there. So if we see that happen, that would be perfectly normal. And that does it for this one, everyone. Thanks so much for coming by and checking out this video. I'm looking forward to seeing the next one. And until I do, have yourself a powerful day.